Begin the first plenary session very shortly. AFI10, Impact of Financial Inclusion Policies in the Last Decade. Just a few housekeeping announcements. Mr. Innocent Asamoah from the Bank of Ghana picked up a bag and a laptop that was left in the bus this morning. Now, he's passed that off to the Secretariat staff, but in any case, you lost your bag and your laptop, you misplaced it, you didn't lose it because we found it. Not to worry, just come and see us and we'll grab Mr. Innocent and we'll see who he gave it to so that we can be sure that you get it back. All right, so if you misplaced your bag and your laptop, please don't worry. If you left that in the bus, we have that. Please come and see us and we'll try our very best to assist you with getting that back. Also, ladies and gentlemen, we ask that you please switch your mobile devices back to silent or vibrate mode before we begin our plenary session. And I would like to remind you all that we'd like to hear from you and we invite you to send us your feedback. Make sure you complete the evaluation on the GPF app. Please, if you can complete the evaluation on the GPF app. That applies also to those who may have attended a few of the workshops earlier during the week, and there is provision for you to provide feedback. We invite you to do that as well. We'd like to hear from you. Ladies and gentlemen, because of time, I think it's best that we begin with the first plenary session. We thank you all for your patience and your presence. The AFI10 Impact of Financial Inclusion Policies in the Last Decade will examine how far we've come in financial inclusion, both globally and at the national level, the impact that financial inclusion has had at both macro and micro level, and the contribution to international development objectives such as poverty reduction and gender equality. This session will also explore the specific contribution of smart policies and identify where global attention should be focused to ensure progress is sustained through the next decade. I'd like to invite our speakers now, our panelists, to please come up on stage and take a seat. Mr. De Vasconcelos, the governor of the Central Bank of Timor-Leste. Our next panelist, of course, Mr. Tanya Gona, the chairman of Management Board and Managing Director of GIZ. Our next panelist is Professor Thurston Beck, Professor of Banking and Finance from the University of London, who's joining us via Skype from Frankfurt, Germany. Ms. Dorothy Singer, the economist from the World Bank, and Amina Tirana, the Senior Director of Visa. These are our panelists, ladies and gentlemen, and I invite them to come and take their seats up on stage. Let's give them a round of applause. Also joining them on stage to set the theme, we have Dr. Patrick Njoroge, the governor of the Central Bank of Kenya. Let's give him a round of applause as well. He's going to join us up on stage. And ladies and gentlemen, our moderator for this session is Dr. Alfred Hanig, the Executive Director, AFI. Let's also welcome him back on stage. Thank you so much.
Yeah, welcome back. We have this very distinguished panel, which was actually already well introduced by our MC from Fiji. So thanks very much for helping us to make this session efficient. So I don't have to have too many words in advance of this session, but I would like, of course, to appreciate the presence of this very distinguished panelists to reflect with us a little bit on the impact that we have seen in the past 10 years on financial inclusion, which apparently also cannot be discussed without drawing our own conclusions on what the future challenges will be, and of course, what are the solutions to resolve the remaining challenges. So this is basically what we are going to discuss. I understand that we have a panelist who is also on screen. This is Professor Beck, who you, or many of you know, who has been very elaborate on especially financial inclusion data and measurement, looking also after connection between finance growth and most recently also growth and financial inclusion, stability and inclusion. So we are very happy to have him. So I want to greet him first, although I can't see him at the moment, but I understand he's with us. Now, looking at our real panel, not the virtual panelist, but the real panel, I would like perhaps to start off with my female panelists. So to my left, I have Dorothy Singer from the World Bank. She's working with a team that compiles the Global Findex, I understand, every 3 years, which has become a major data source for many of us. Tanja Gönner, Chairman of the Management Board of GIZ. And I mentioned GIZ this morning already as one of the key catalysts for making this, what we are experiencing today happen. Maina Tirana, who is now with Visa, who is also, I think, a follower of AFI for many years. So when it comes to institutional memory, I think Maina would also be good to be consulted. However, she is basically here in order to share also her view from the private sector on the last 10 years and what the private sector sees as an impact and remaining challenges. Abrao Vasconcelos is also a member almost from the beginning of AFI. He's the governor of the Central Bank of Timor-Leste and has been active in many of these activities. I think you also launched a very important accord in Dili a few years ago. Anyway, our Pacific Regional Initiative, as you know, is a very active one, and Governor Abrao is also an engine within this. And finally, Dr. Patrick Njoroge, the governor of the Central Bank of Kenya. It is not easy to get him, but we are happy to have him for the 10 years anniversary of AFI. He has been at some of our events, but I don't think that you have been at a GPF, have you? No, you haven't. See, so you are coming at the right time, and hopefully this is encouraging you also to stay with us. Now, with this distinguished panel, I think I'm very privileged because these are people I actually would like to ask questions all the time, but I only have a little bit of time for that. And having said that, I must be a little bit rigid. So the interventions of the panelists must be pretty short. So while I'm going to ask the professor, who is on the screen in a minute, you can already perhaps think how you can streamline your own contribution so that we can have a lively discussion. And I want also to engage the crowd. So let me perhaps then go further and ask Thorsten Beck, who is listening to us from Frankfurt, about the main impact that he could detect from his own rigorous research that financial inclusion has made. And while we are talking about this impact, of course, I would also like to know, what does research tell us about the key drivers which actually have driven the outcomes we have seen in the financial inclusion sphere. Thorsten, welcome to the 10th anniversary. I hope the weather is fine in Frankfurt as well. Please go ahead.
Well, thank you very much. I hope you can hear me. Well, first of all, apologies for not being able to be there in person. I'm going to talk quite a lot about technology, but the one thing technology has not managed yet is to enable us to be in two places at the same time. Alfred asked me about policies and impacts. Let me maybe start with policies. So the standard answer that you would get, what would you need for more financial inclusion, is you need a sound institutional framework. And that has been kind of a standard and not very satisfying answer for the last couple of years. If you go deeper, you typically get a laundry list of things you were to do. But having said this, I think we know today much more than we did 10 years ago when AFI started. For example, and I want to recognize this here, acknowledge this, AFI has put together a quite nice database on policy changes and initiatives that have been undertaken by different members, and that, of course, is quite conducive to actually undertake some analysis in this area. Now, let me focus on a few things here. First, there is a very important role for competition and for enabling new providers to come in and offer financial services. Now, this, of course, implies that the regulatory framework is there to actually allow these providers, also including non-bank providers, such as telcos, to come in and mobile money services. So we need kind of a level playing field to allow these players to come in. A second important issue here in this context is regulation on consumer protection, but also on AML and CFT. And here we are, I think, facing a little bit of a trade-off that on the one hand, we have to regulate and supervise, including non-bank providers of financial services, but this, of course, has to be kind of proportional to the risk they pose to the financial system, to the real economy, and ultimately also enable financial inclusion. So there is a clear trade-off between these two goals. Finally, let me mention the sandbox approach, and I'm very happy, of course, to see the governor of CBK also on the panel, because I guess Kenya almost kind of invented the sandbox approach to financial innovation by allowing M-Pesa to start some 11, 12 years ago. I don't think we called it sandbox back then, but it kind of was the original one. All of this is, of course, makes regulation much more difficult in the sense that you really need a dynamic approach. So things change, new products come up, new providers come up, new services are being offered, new clientele groups are being targeted, and that really requires supervisors and regulators to kind of follow very closely the development in the financial sector. Now, let me talk about the impact side very briefly. And here I kind of want to come back to a classification or categorization that my good friend and co-author Sam Mainbo and I kind of came up with a couple of years ago when we together wrote a policy report on finance in Africa together with two AFDB colleagues, which is this kind of this finance for all, finance for markets, and finance for growth approach. And of course, finance for all, or financial inclusion, enabling as many, if not all, households, individuals in a country to access basic financial services. That's of course that's the focus of the AFI meetings and so on. And I think here we're talking, I think, not really necessarily about different financial services, but more like entry points into the financial system. And I think what we've seen is that payment services are really kind of the entry point for many previously unbanked people into the financial system, which of course doesn't mean that it's the end point, but it's an entry point which then might enable them also to access other financial services through new delivery channels, for example, digital finance, such as savings, credit, or maybe even insurance services. So that's a very important thing to keep in mind, but I think it's really not about choosing different financial services, but really what is the entry point for people into the financial system. Number two, finance for markets. I think we should not forget that these financial innovations, such as mobile money, such as digital finance, can also help firms become more efficient, especially small enterprises. So I've done some work on Kenya, for example, where we've shown that by being able to pay your suppliers with mobile money rather than with cash, small entrepreneurs actually are able to get more and cheaper trade credit, which is of course very important because that's a kind of it is this complementarity between mobile money and actually other financial services, which is very important and ultimately has implications for the SME sector and for the private sector in general in many of these countries. The third point I want to make, and you might be a bit surprised that I bring this up here, but you're going to see why in a moment, and this is the finance for growth. Talking about financial inclusion, we should not forget that the financial sector has a critical role in helping financing long-term assets such as infrastructure, mortgages, but also for government purposes. And here I think we have to again look beyond the banking system into these non-bank financial providers, including insurance companies and pension funds. Now, how does this link back to financial inclusion? Very easy. So a year ago or so, I did some work in Latin America on long-term finance, and one of the countries I visited, Colombia, kind of is facing the problem that the overall pension fund assets are going to peak in a couple of years due to demographic changes at around, I think, 25 or 28%, much lower than they would need for their long-term financing needs. Why are they peaking at this relatively low level compared to other countries? Well, because of informality and people not contributing to the pension system, and maybe also to other financial segments. So, which of course, informality brings us straight back to the issue of people not being included in the financial sector, because it is better to work in the informal sector and therefore also not to tap into formal financial services. So I think all of these three agenda points really kind of link together, so that we should have a broader picture, not just on financial inclusion and the impact it has directly on households, on individuals' well-being, but also on the overall growth agenda, development agenda of different developing countries. Thank you.
Thank you very much. We would like to move forward directly and perhaps see the contribution of the next speaker in the context of what you have been saying. So I would actually like to continue with the data side. And since we have Dorothy with us from World Bank, who is overseeing the Findex, of course I would be interested, Dorothy, what are, from your analysis, what are the most successful countries in terms of driving financial inclusion according to the Findex? And if you then could also perhaps let us know, why do you think, what does the Findex tell us about that? Why is the gender gap still so stubborn? I mean, the context that I should perhaps just give you, we have seen two of these Findex exercises, as I said, and I find it quite interesting that in the first round, between 2011 and 2014, we saw a reduction. So we saw actually 700 million people banked in addition during this period. And in the second round, from 2014 to 2017, we saw 550 million people banked. So it looks to me a little like a slowdown. And I would also like to understand, is it a right observation? Have we explanations for that? So maybe you can touch briefly upon these three aspects. Thank you, Dorothy.
Thank you, and thank you for the invitation to be here today to talk a bit about the global financial inclusion journey that we've all been on and what we've learned in the past 10 years. As you know, the World Bank launched the Global Findex database in 2011, in part because there hadn't really been a lot of data out there yet, and we didn't really know how many people used financial services. And so, as you mentioned, through the 3 rounds of data we've collected since then, in 2011, 2014, and most recently in 2017, we've gotten a much better picture of how people use financial services, so how people save, borrow, make payments, and manage financial risks. Now, when we look at our headline number, account ownership, it has increased. As you mentioned, since 2011, about 1.2 billion adults have gained an account, including 515 million since 2014. So in terms of, share of adults who have an account today, that increased from 51% in 2011 to 62% in 2014 and 69% today. So clearly the rate of increase has been a bit slower in the past 3 years compared to the first 3 years. But I think it also illustrates, and you mentioned that in your opening remarks, is that bringing people in the financial system is only going to get harder the more we achieve, right? Bringing financial services to traditionally disadvantaged populations, such as, adults living in more rural areas, women, other adults in rural areas especially, it's going to be harder than banking the first people. So I think, this is in part why we see a bit of a slowdown there. Now, of course, we've seen success stories, across the board in the last 10 years that, we've looked at the data. And I just want to share 3 with you today here. So one is certainly that digital technology is driving a lot of progress we have seen. And one story is certainly mobile money. I think especially in sub-Saharan Africa, we've seen that mobile money has really brought a lot of people into the financial system. So Kenya, of course, has been, one of the first countries that really capitalized on that. And where we see today that basically, all adults who have an account basically use mobile financial services. But mobile financial services are not just used in Kenya nowadays or in East Africa, indeed. They've really spread across the country, the continent. And so today, in 2017, it's been remarkable to see that, even in West Africa, we've seen a lot of progress driven by mobile money. And I should also note that it's not just sub-Saharan Africa. We've also seen progress in countries such as Bangladesh and Paraguay. India is another story where, enabled by digital technology, we've seen a large increase in account ownership. And account ownership in India has dramatically increased. It has more than doubled to 80% today. And a lot of that has been driven by a government push to boost financial inclusion among the unbanked, enabled by the use of biometrically enabled identification cards. So, but we've also seen progress in, Indonesia, for example, where account ownership also doubled to 49% today, and where remarkably, growth in account ownership has been very even. So Indonesia, for example, is one of the countries where we see no gender gap in financial inclusion, which is quite remarkable because, as you mentioned, when we look at the gender gap in general in developing countries on average, we see a 9 percentage point gap. So men are 9 percentage points more likely than women to have an account. And, Indonesia, but also Russia, for example, we see no gender gap. We see other countries, such as India, for example, where the growth in account ownership has actually narrowed the gender gap to today 6 percentage points, down from 20 percentage points just 3 years earlier. But we also see countries where the growth has been really uneven, right? Where we've seen, dramatic growth in account ownership overall, but it's been disproportionately for men. So, I don't want to, call out any countries here, but certainly there's a number of countries where we've seen account ownership almost double for men. And while it's increased for women as well, it's just not been at the same level.
Well, thank you. Now, after having heard about the data situation and research background from Professor Beck, who, as I understand, has to leave soon or has perhaps already left, and hearing from World Bank, I think it's now time to turn to the country that has been often mentioned as a success story. And I think you are here to give us the context from the country perspective. A country that has gone through a tremendous development. I do understand that 75% of Kenyans are now having access to mobile money. We have seen tremendous progress, often mentioned. Now, from your perspective, Governor Njoroge, if you think about now addressing the theme of this panel, what have been the key drivers in your case? What have been the challenges, and what are your resolutions?
Thank you, Alfred. Of course, we'll do all that in a couple of minutes, right? So instead of a couple of years, but thank you very much, and thanks for inviting me to this panel. Right off the bat, I think we could say that in Kenya, or Kenya's success really has been a confluence of good factors that reinforce themselves. In a sense, it's true we started off with M-Pesa at a little more than 10 years ago. And I think the point we would make there is that there was a real need. There was a real need in terms of that was being solved by the product that was brought in. That is essential, and looking forward, that's an issue we always come back to. If there's any fintech product that comes to us, the first question is there a real need for it? Secondly, there was also another element that came in at the same time, which was the element of agency banking. Both of them came at the same time, or rather, actually, they were 2 years apart. Agency banking came in 2010, and M-Pesa came in 2007. Today, we have about 200,000 agents in the country. So you could think of this as the equivalent of little banks or ATMs. And they are spread where people are. So in a sense, it made things easier. It wasn't just the mobile money by itself. The agency banking also helped. And that's an element, I think, that maybe in other countries they don't quite have. The third element, which I think is also important, was that we had a countrywide register for ID system. And this was, it had some biometrics, that's the fingerprints, and also had a photo. So it was easy to begin using that service. There are many of our countries that really don't quite have that. It's true today we want to improve that database, if you want to call it that, to improve the AML, CFT sort of considerations. But I think these factors were essential in the success of mobile money at the beginning. There's a couple of other points I would want to mention as well. Of course, we are not the only ones that have succeeded. Others in Eastern Africa, Rwanda and Tanzania have also been phenomenal, have had some phenomenal success, and I'm sure their success has somehow, they've learned from our mistakes, if you want to call them that, and therefore they were able to move faster. But there's one other element that I want to also highlight, which is the role of the regulator. And this, I think, particularly given today's theme, or the theme of this conference, is important. The regulator isn't there to throttle innovation, but rather the regulator identified the risks that this product was bringing, or this was being brought by this system, and in that sense was able to work with the company to minimize, or should we say, get some remedial measures to minimize those risks. Of course, we'll never eliminate risks forever. But I think the point here is that the regulator was willing to experiment. In a sense, the regulator was innovative in that sense. And I should also explain to everybody that we didn't have any law at the time. So in effect, what we had to do was to have some rules and regulations and understandings, but the laws only came in 2013, so much later, and the regulations only came in a few years ago. So in a sense, we did not wait for the law to be clarified and so forth. I think those are the key elements in terms of the success. You're asking the challenges. I think the challenges here were that the risks are evolving. And today and now we have different risks than we did 10 years ago. So the regulator needs to be very much on top of that. For instance, today, the biggest risk is cybersecurity. And so the regulator had to be ahead of the curve. And recently, we issued guidelines to all these players in the sector. There's also another issue, which is, and it has been, let's say, part of the bane of our success, which is the issue of interoperability. And it's true the other countries that started after us were able to start in an interoperable fashion. But the point is we only had one, so by definition it was interoperable, but you can imagine what happened when you had a second entrant. So what we've done is this year, we actually did take that step. And now we have interoperability in the systems, at least in the P2P transfers. But I think the point I'm making here is that that was a problem that had to be dealt with much after. We knew the problem, and we knew the benefits that would come out of it, but it only came with time. Maybe just one thing before I finish. In terms of looking forward, we now have an ecosystem which is quite rich. And it's not just transfers. It's not just mobile money as such, but it's an ecosystem. And we are having other things, for instance, that actually are much more interesting. I appreciated the point about the slowdown in financial inclusion that maybe the data is showing. Perhaps we need to look at the usage and also other services expanding the ecosystem. And we could discuss that, what are those services, but I think for me, just the names, savings products, things related to health products, insurance, SMEs. I mean, there's so much that can be done to expand the ecosystem. Thank you.
Thank you, Governor. But I really feel tempted to ask you a follow-up question on this. And you mentioned, of course, usage. Now, just quickly going back to Dorothy, she mentioned the tremendous success in India, which is remarkable. But we all know that of these, did you say 800 million accounts have been opened, no?
In India?
Yeah.
Well, as part of the government initiative,
yeah.
we've seen about 300 million accounts being opened in the past
It's 300.
3 years.
300, but I think we also need to recognize that 40% of these accounts are reported to be dormant. So there seems to be, that produces apparently a reaction. You can come in later. But I mean, the usage issue is relevant. Now, Governor, my question to you is, I really like, of course, this approach that you are taking in Kenya, which is about experimentation, not stifling innovation, providing space to learn, going with the market, having some flexibility as much as possible without, of course, putting things at risk what you don't want. Now, my question is, in these new areas, like what you mentioned, cybersecurity risks, for example, how does this approach work? How does experimentation work in this area, in your experience?
I can assure you I won't give you a satisfactory answer, but let's see. In the new areas, I would say that there are new areas in the sense of new products, okay? So, or new fintech gadgets, whatever you want to call them. I even mentioned, the point there is that whatever we do, we need to regulate the products according to their services. So we do not want to have any sort of regulatory arbitrage. So fine, if you have a particular product that is a savings product or a particular product that is, let's say, a credit product, it has to be regulated the same as other credit products, regardless of the platform. And that is a principle that we want to follow. It doesn't make sense to actually regulate it in a different way. But anyway, we can discuss that. The issue then is, what about other risks that may be emerging? This is actually the difficulty. We have to be much more alert on that. And we as a central bank have to wait. I mean, we do not want to wait until we see the problem emerging in the jurisdiction. So in a sense, we are in touch with other jurisdictions and understanding what is happening there. So we want to be the first to know about other risks. And frankly, we have a team of about 20 people that their responsibility is actually to be alert and working, really figuring out what are the risks out there. Then the issue is, how quickly do you bring it to the jurisdiction, or rather to the players in the jurisdiction? And that means we need to be in touch with the various entities that are there. And that discussion is extremely important. So the role of the interaction between the regulator and the institutions that have been regulated is one that you could say is a positive sort of dynamic, meaning they are not afraid of the regulator. And as a matter of fact, in those things, they want to know what the regulator is thinking about particular risks. And there's a lot of symbiosis, a lot of transfer of information back and forth. But let's be clear, it won't be them that will see the risks first. So far, it's been the central bank. And the reason for that is we are in touch with many other external parties, and the risks often appear somewhere else before they get to us.
Well, thank you so much. I take away from this that, and I think Kenya is another good example, that we see the necessity for the interaction across the regulatory domains in order to have a complete picture of these risks. And of course, when it comes to the resolving of these issues, again, you also need to move forward in concert with others. So this, I think, is an important lesson. Now, let us turn to another country. And this is Timor-Leste. And Governor Abrao is, I think, with us for 10 years in this network, and we have seen a lot of progress over this time. Could you summarize what you would like actually to highlight from your own country case in terms of moving forward on the financial inclusion agenda, but also tell us what are your questions these days? What are your challenges?
Thank you, Alfred. Well, in fact, we started the journey, if I could just describe a little bit. When we started in 2008, I remember we had a conversation in Bali, and the topics that will be brought. And Central Bank of Timor-Leste at that time was still relatively young. We got independence in 2002. The challenge that the country experienced were tremendous. And we started when we initiated all the, introduced the initiative related to the financial inclusion. I will share with you some of the progress that we made. In 2016, we conducted a supply-side survey. This is just to check whether all initiatives that we have introduced in the past gain sort of or show success. When we completed the study, we found out that I will share with you before I talk on the question that you mentioned. We have almost 400,000 people. Of course, we are not talking millions like what we have here before. We have 400,000 adult population. They have access to system. The total adult population is slightly above 600,000. So what we found out that the number is increased. If compared with when we started the journey back in 2008, which is just 13% only. So over the course of 10 years, we have achieved a lot of progress, but this does not make us happy because we also look at other figures, which is the access point. Although the financial system, particularly the banking system, they expanded quite a lot in terms of the access point, which covered almost the entire territory in the main areas, municipals. But take into account the fact that the 70% of population live in the rural areas. It makes a little bit difficult. And for people to access, the result that came out, for instance, only 5%, 5 kilos, people that access to the banking, the access point, it requires, the area is only 5 kilos. The rest is like, they have to travel over 20 kilos just to reach into the point. So what we after we look at this figure, um, we introduced, we launched or introduced the National Strategy on Financial Inclusion, which elaborate a number of new initiatives. And we, at the same time, also we declare, the introduction, the modernization of the national payment system, which is currently we are doing. The idea is that we want to integrate the entire financial system, which currently in progress. We have integrating commercial banks, and now we are start looking at other sectors, particularly those that provide like money transfer operators that provide cross-border. That is basically what we try to see is that, for instance, many Timorese working in UK, in Europe, Australia as well. Normally, because of time difference, people when they receive, those that receive salary in Europe, they will transfer over the weekend. So it will not surprise if you go to Delhi, you see over the weekend, Saturday, people queue in front of Western Union or MoneyGram, a very long queue. So this is something that we look at. Why should people, they have to go and queue there? If there is facility that people can use, for instance, to transfer straight to their account. So this is some agenda that now we are working with. At least now 2 banks already integrate. Main integrate is that their system, ATM, POS, integrating. We have 2 that is coming. We hope before the end of this year, the entire banking system will be integrated. So we are looking at how to get the money transfer operator integrating into the system. We are also now working with a mobile network operator to include them. And this is something that before the end of this year, probably this could be achieved. Basically, we allow, well, this is mandatory. So we're talking about the interoperability. This is something that like automatically is going to happen because we have sort of issue statement that all e-wallet provider or all mobile network operators that offer e-wallet product, they are required, is a mandatory to join the national switch. It's, for instance, the transfer element should interact with, connect with the national switch, including also utilities payments, for instance. So this is something that we are now trial with one of the mobile network operator. So this is something that we are working with now. Now we are also looking at the non-bank financial institution. We licensed 2 of them already, so they could be sort of like an indirect participant into the system. So this is something that we believe that in the medium long run, this will help a lot. The reason why we want to include the mobile network operator and non-bank financial institution, basically those are institutions that the origin from microfinance institution. They have more access points. They have meeting centers. They have field officers that visit those places that commercial banks cannot, they cannot reach. So if commercial banks, they use those sort of access point, this will provide a lot of benefit for people that live in the rural areas. Just for information, over 30% of the accounts that we have in the banking system, that exclude the credit union, microfinance institution, are those that receive payments from the government, subsidies like elderly, veterans, etc. So it's about 98,000 accounts that are receiving payments directly from the government. And the issue is that it's very difficult for them to, if they want to get the money, they have to travel to the bank office to get the money, which before they have to, the finance officer visit their place and pay in their place. So this is something that we see probably the challenge will be how to keep them in the system.
Well, thank you very much. I will have a follow-up question later on fintech for financial inclusion, but I think it's now time to also allow private sector perspective to come forward. Amina Tirana, as I have said before, we know each other for quite some time in various roles, but at this stage I would be in the first place interested in your current experience, which is very relevant to us. We had a PPD roundtable yesterday, which I think was very well received by the participants, and I think we got some guidance from that group in terms of that what maybe the AFI network would like to see to come out more clearly, something like a risk framework that would help us to better understand the risks of financial technologies, and of course ways to keep these risks in check. Now, there was also yesterday a recommendation, I think, from the GSMA related to the question of self-regulation, like code of conduct for providers that they can impose on themselves, which might even have interesting lessons for regulators. I'm just saying this to set the context, but now from your experience, what have been the key drivers in financial inclusion from the financial, I mean from the private sector perspective, and what risks are you currently perceiving?
Thank you so much, Alfred. I guess we have known each other for quite some time. It's been a pleasure, and I think I can safely say that this topic is keeping us all both young at heart and hopefully young in exterior as well. And I also want to congratulate everyone here in AFI for 10 years. Birthdays are really fun. It is quite incredible to conceive of an organization, think about it, and then watch it develop and actually happen and come to such magnificent fruition. It's quite wonderful. Visa, we're also celebrating, I'd say, a much older birthday. We're 60. But the lesson that I take away from each of these is that no one can do it alone. We just can't. In the financial world, in the payments world, in financial inclusion, and AFI really embodies that. And the leadership and the around policies, regulation, and so much more that has come from so many governments as well as other stakeholders has been instrumental, to say the least. So let me maybe talk quickly about three things, right? Some trends that we see from the private sector. I'll talk a little bit about the payments and Visa specifically, and then some of the risks and future trends. So the private sector has obviously played a very, very large role in delivering diverse kinds of financial services. The financial system, as we all know, is incredibly complicated, but for a consumer, it should be, the use of it should be incredibly simple. And I think we see that one of the elements of success in financial inclusion is that simplicity and intuitiveness of a service or a particular product that helps people understand it and helps it scale. And certainly the marketing around M-Pesa, send money home, that's just like, it was a great example. But we see this in many other products, our own and others. And in this way, a digital payment is definitely an on-ramp to financial inclusion. It is very often the first formal financial product that many people use. It's not the only on-ramp, but it is one of them. And we see what is so important here is that it's dynamic, and it's been changing and evolving. And that where you have open, and these same themes that have been expressed earlier, open, interoperable, and competitive markets, you're getting a lot of investment, a lot of creation, a lot of innovation that constantly upgrades and changes. And it comes from small, little companies and startups. It comes from big ones. And that's really valuable and is what's driving the scale that we're seeing. So quickly on the second topic, Visa, as many of you know, we have been working on financial inclusion for years. A lot of my colleagues say, well, we do that as we build out our markets. We now have more than 3.2 billion accounts, and around the world. And something we're very pleased with, more than 46 million merchants. So that the number of merchants who are part of the Visa system has grown by about 60% in the last 10 years, in AFI's lifetime. And we do this through partnerships, right? No one can do it alone. That includes Visa. We work with banks, cooperatives, fintechs of all kinds, governments are our partners, nonprofits. And that partnership is so key to our success in a lot of countries. Many of you may know that we've made a commitment to do even more around financial inclusion, and we're really pleased. Our progress, we're on track to meeting that 500 million commitment to the World Bank. And that comes from, we calculate this country by country, 190 different countries around the world as part of our progress. And some countries are smaller and some countries are larger in terms of the amount that they're contributing. And there is a correlation to those countries where either financial inclusion is growing and also other countries where digital payments are growing even faster than financial inclusion. And this tells us a couple of things. That again, the benefit of interoperability of diverse channels, that every country is different. And so what succeeds in Kenya is going to be so different than Timor-Leste. And we see that and we recognize that, and we all want to be adaptive and responsive to that. And I think that the data that we see, whether it be from a global source like Findex, from local partners, qualitative and quantitative, is so important all to look at and understand. But we also at Visa truly and deeply believe that progress is much more than an account. And this is part of our business DNA, because a dormant account is just, that's not any good for a business. So we really, the emphasis on building a full digital ecosystem that's interconnected, where there's seamless experiences. That's really how you get to scale, and it's one of the reasons that I mentioned the merchants. We focus a lot on the micro and small merchants. Many of them are excluded themselves, but they're also key for the consumers to learn about services, to have places to use them, to connect, as Dr. Beck said, the suppliers and value chains. And that's also how you get to scale. And time permitting, I could give you some examples of how we do that. Before I move on to the future, I'd say, let me just sum up the enablers. Partnerships, the enabling environment and the regulation, right, is really, really important around that. What did I write here? I should put on my glasses. Oh, the ability of the product to meet the needs. I know. That has changed with age, Alfred. When we met, I didn't need glasses. So partners, the right product, reliability and trust is enormous. There's a Dutch saying that says, trust arrives on foot, but leaves on horseback. You know, and if you lose that in one moment, especially for the newly served, it can have huge impact. And with those, then you get to scale, right? And that scale is so important. So then just briefly, the last bit, what are some of the forward trends? Absolutely technology. We are a technology company, but it has to be applied with purpose and focus. It's not just technology for technology's sake. I think we also have to continue to think about what really benefits people and convenience. Many of you may or may not know that only in 2015 did digital payments actually surpass the use of cash around the world. And cash is just still everywhere. That said, going forward, what do we see today? First, we see hyperconnectivity. There are many, many more devices, creating more convenience, but with that, more and more personal data that's being exposed. Second, we're seeing an enormous shift to e-commerce, and this is really exciting because that's a big enabler of business, particularly small businesses around the world. But with both of those, we have a shift in risks. The governor mentioned the cybersecurity, absolutely, but personal data is now so much more exposed. In fact, in 2017, there were more than 3 billion personal records compromised, you know, just on a global level. It's a huge number. And the criminals, they're no longer profiting on getting access to your bank account. It's getting access to your personal data that they're now monetizing. So how do we start to change that? And yesterday we had a really good discussion of the different ways that you can protect that information. And it's an excellent topic for discussion and collaboration, and a risk framework would be a really great outcome.
Thank you, Amina. Before I hand over to Tanya, okay, this is a 10th anniversary opening plenary, and we talk about the impact and, of course, the past. Now, you have also another past which is different from what you're currently doing, and I would like to explain that Amina was with the Gates Foundation at some point, actually around the time when we started. And we share small story here, which is around the name of our organization. And I wanted to ask you whether you can tell us the story, because I think it will lead nicely into the next presentation. Amina.
Thank you, and it links actually back to what I started with. I had just started at the Gates Foundation in the brand new Global Development Division, and I think Alfred was the first external partner whom I met as we were reviewing a very big grant proposal, and some colleagues from GIZ came over as well. And one of my colleagues said, well, listen, can you talk to them about the name? And you know, we got to figure out what to call this institution. And three of us sat, a colleague from GIZ, Stefan, Alfred, and I sat together, and we brainstormed and talked about, well, what really matters? What is this about? And we all know the term financial inclusion, but at the time, it was actually not very well known. So that was the first step. But then the other part was, what are we trying to do with this entity and organization? And the point about coming together and creating a space for dialogue, for open discussion, and partnership. And the term alliance came up, and it just really stuck. And it works in multiple languages as well. And I think that point, almost more strongly than the financial inclusion, the alliance part, really underwrites everything that you've been doing.
Thank you so much. I think this is important, and I can tell you that it took a lot of energy to get this name off the ground. I must say that Amina was very, very strong in supporting the alliance idea. We also had a few other ideas, which I'm not going to mention, maybe better for the coffee break to be discussed. Interesting discussion. Now we have the alliance. Tanya Gönner, who is the chair of the management board of the GIZ. I would like, of course, to know from you and for you to share with the audience, why did you do this? Why did you find this idea attractive? Why did you find it attractive to incubate something like what we have today? And my second question, of course, would be, is this useful for the rest of your work, which, as we all know, is in so many sectors, in so many countries? Is that a useful model? So maybe you can drill down on those two. Why? And is it possible elsewhere?
Well, first of all, thank you for inviting me to this session. And I also want to start with congratulations. Congratulations to AFI as an organization, to his 10th birthday, but also to all members who were starting with at the beginning, but also came in later. And at least, but not last, I want also to congratulate you personally, Alfred, because you, and as we now heard, you were at the beginning. And without having people who are willing to experiment, we heard it before also from the governor of Kenya, who have a strong will also to go against borders, frontiers, and sometimes strong reactions from another side, we could not be successful. And I think one of the successful story is that you always thought about being an alliance, having the idea that networking and sharing experiences, and also looking what is in a good way, what works in a good way, and to share all this knowledge. I think it is one of the success stories of AFI, and I think you all could be very proud of this success story. Saying that, what was why it was interesting for us to go in that? First of all, as an organization working in the development assistance, a bilateral organization working in the development assistance, we always think about ways how to improve the delivery of the question of development assistance. And therefore we have been very interested for some time in the questions how to create models for international cooperation that empower developing and emerging countries and strengthen their collective voice. That was the idea behind. Sitting here in the year 2018, it is nothing new. But remember, it was 10 years ago. The Agenda 2030 is from 2015. And since that, we discuss about partnership and we discuss about how to join forces. But before that, we didn't do that in that way. And I think this, having this in mind, it's maybe clear what is the story behind it. And that's what's really interesting for us as GIZ, because we think that only in this way we were able to strengthen the collective voice of the developing and emerging countries. And incubating the AFI ID was not only a good fit, but also a welcome challenge. It was a challenge for us, to be honest, because on one hand, we have our understanding of technical assistance and capacity development concepts, and also a strong presence in member countries. But on the other hand, we have some procedures and regulations on ourselves which not fit so good to the idea behind it. And that, because of this, it was a real challenge, but we are happy that we were able to work with this challenge. And at the same time, for us as an organization, the idea of AFI and the building up AFI as an institution allowed us to learn and reflect on these structures and procedures I mentioned before. It helped us to rethink their roles, supported an important institutional learning process on our side, but also in how we advise institutional building, and especially helped us to generate crucial insights into global network management. So to harness that innovation, an organization needs to create a protected space with enough flexibility for projects to fully unfold their potential. And that was, on one hand, the willing to experiment, and on the other hand, how to learn from this. And then we shared the same values in our work, the same as the Alliance. That means equality, fairness, country ownership, and self-governance for countries. And I think the strong governance structure of AFI in form of a steering committee and now the board of directors comprised a high-level policymakers from developing countries was also a key factor for us, providing a strong sense of ownership and giving AFI the credibility and also the legitimacy in the policy-making community. And the last one is we shared the same objectives and believe that proven policy solutions are key enablers of policy reforms. And as you mentioned before, every country is different. But if you have proven solutions, you can learn from these proven solutions. That means especially the deployment of the mobile banking in Kenya. I know a lot of people are looking at that. And on the other hand, the agent banking regulation in Brazil, and bringing both together and thinking, how does it fit together? What do we need? I think is one of the keys we have learned. So in sum, we as GIZ are very grateful to learn from AFI experience. And yes, coming to your second question, yes, we always would like to replicate such successful stories, but then you have to look, could you do that or not? And there we have to show what are the success stories and what are the keys behind that. And because of this, we have to understand some of the success factors of AFI are unique features of the community of financial regulators. I would mention some of this. You are all regulators who are already used to collaborate across the globe through existing networks. So that's normal for you to do that, and that's not in all other sectors like this. And you don't have a lot of sectors where regulators look on global processes, but always look on their own country processes. So this is, I think, one unique point. Then you as members, perhaps unlike other public institutions in developing or emerging economies, are relatively well equipped with human and financial resources, and you need that. For capacity development, you need human resources, and that makes it easier to join peer-to-peer exercise and to support the network. The third one is you are comparatively free from the political influence. And this is also, I think, very special because policies instead of politics seems to be one of the guiding principles of the network. And this gives you a very strong role to do the things. And at the end, you as members of AFI show comparatively high continuity of leadership, which helps to maintain high-level commitment. Because you know each other, and it's something that it has to do something with trust. I think these are very unique factors in this network. And so, therefore, I would conclude that replicability can work in spaces where we find similar conditions as outlined above. But, however, individual elements of the AFI approach can definitely be transferred. And we are always, as Gia said, try to systematically learning from this experience. But on the other hand, should know it is not so easy. We always should see what are the key factors for this.
Thank you so much, Tanya. I think this was a very insightful assessment. Before I ask for a few questions, I wanted to ask the two governors a question. And this has to do what we currently observe in the developed world. And I actually can draw the line in two respects back to Tanya Gönner. She's living in Frankfurt, and she's German. And she mentioned Basel. Now, the Germans don't like cashless. I'm a German, so, but I'm learning from you, so I'm using a lot of cashless now. But anyway, the Germans don't like cashless. They want cash. And others in Europe are worried about cashlessness. And for example, there was the Swedish central bank governor expressed his concerns recently and asking for securing public control over the payment system, including and receiving payments, in his point of view, is a public good that needs to be protected, such as any other public good, for example, defense. Now, talk about fintech, talk about financial technologies. Now, it is an interesting coincidence that this Swedish central bank governor at the same time is the head of the Basel Committee. Now, my question to the governors is there, with all this, what is happening so dramatically in the fintech space, do we see a risk in terms of a backlash to financial inclusion? And if so, what can we do about it? Maybe I can ask Dr. Neuroge first, and I'm really looking forward to your response.
Thank you for a difficult question. The way we see it is, maybe let's begin with the atmospherics around your question about, say, cashless and things like that. I think that's an objective that maybe in many jurisdictions people think is very avant-garde, very forward and so forth. But in our jurisdictions, and I think virtually everywhere else, there'll always be need for cash. So it's an objective, but I think we all know we'll never really get there. There's always a need for cash for other reasons. Also as a safeback, I mean, as a safe fallback position if, say, the system goes down. I think there has been cases where the ATM systems have gone down, and the pain of that is phenomenal. Now, it means one could always say, okay, you do need to have a better, continuity system, business continuity and things like that. Yes, we know all that. But at the end of the day, even for our countries, you have people that are, say the people who are very in the rural areas, poor. At the end of the day, cash will always be there from our perspective. So we don't see it as an objective that we need to push towards as others. We have much more pressing questions, which is expanding financial inclusion. So now in terms of the backlash, the way we see it is that, yes, we have also, we believe that payment systems are part of, let's say, we would call it important infrastructure in our country. So just like, say, defense or telephones or things like that, that is a part of our infrastructure that is important, and there's a law for it. We passed on that. I mentioned about it. I mentioned it at the beginning. But I think the point for us is it's not, it's something that we can work with, and also other risks that we have there can be dealt with if we are, let's say, if we are looking at them without necessarily having any sort of backlash. So in terms of the Basel things, my view here is that maybe Basel is, the discussions in Basel are probably more on the advanced economy end of things. And we need to bring it down, meaning bring down those discussions to our level. Remember, we are also members of Basel, but maybe we are very much in the fringes. So they are discussing large payment systems. Ours, for instance, mobile money contributes something like, or rather, in our transaction, in our jurisdiction, 10% of the value of the transactions are on mobile, just 10%, actually less than 10%. But in terms of the numbers, it's close to 90%. So 90% of the number of transactions are on mobile devices. So the point is we cannot quite go to all the Basel sort of requirements because we have many more considerations that are of smaller levels and things like that.
Well, thank you very much. I like particularly, of course, the last part of your response. Yes, some of us are at the fringes of the Basel. The point that I wanted to make was basically there is a risk if those countries who are actually dealing with these issues around cashlessness, for example, the way I've described it, they have an impact on global standards. And of course, what we could fear is that some of these regulations that are crafted based on that experience will make our life difficult. That's basically where I'm coming from, and I think your point on that we have to bring our experience as well into these circles is very important. Thank you for that. Governor Brauer, would you agree on that?
Yeah, well, I think we have to look at the national context. I speak for experience. We are trying to transform a society that they used to keep their money in a different form. So, and you attempt to take away sort of those habits by digitalizing or take away the cash element. This is something that we have to make sure that this is not something that will happen right away. We look at this issue, we discuss, in fact, we follow with a lot of interest what happened in Europe, Sweden, particularly like the Governor mentioned before. 90% of the value of the transactions are on mobile devices. So 90% of the number of transactions are on mobile devices. So the point is we cannot quite go to all the Basel We have to understand that, I mean, our level, the level of development in our country, although central bank, we push very much, we want to, we want to modernize our national payment system, but the large portion of our society, community, they are living, I mean, they use cash as a, something, as a means for to transact. So this is something that what we are preparing is that at least we are talking about 10, 15 years, probably this is something that the current generation, we have to prepare the generation for the next 10, 15 years to see this. While we are pushing for how people should start using transaction cashlessly, for instance. But of course, the risk is always, we look at more on our national, I mean, how we serve, the system can serve people better.
Thank you, Governor. I got a signal that actually our time should be up, but I'm also taking the time, and I know that we have received 1.5 hours for this session, so, and we are not there yet. So I take the liberty to just ask one or two quick questions from the panel here. You might even feel encouraged to provide solutions to some of the usage and quality issues that have been discussed in this round, especially when it comes to fintech for financial inclusion, and this is definitely a future challenge, as we heard. So unfortunately, I can't see much from here. So if there's anyone who would like to ask a question to the panelists, I see one person. Please get yourself a microphone and be brief in your question. I can see it's the Deputy Governor from Sri Lanka, right? Wonderful. Thank you.
Thank you. Thank you very much for all the panelists for very important and useful discussion. My question, it's a very short question, goes to Governor of the Central Bank of Kenya. Governor said that with the introduction of digital IT, etc., now you were able to open 200,000 agent banks countrywide. So my first question is whether you are having a supervisory and regulatory framework for microfinance institutions. Second, if there is no, with the opening of 200,000 agent banks, is there any tendency for people to come from microfinance institutions to formal regulated financial institutions? Or at the same time, if their microfinance institutions are regulated, do you see any increase in the competition of financial service delivery, which which is beneficial for the financial consumers? Thank you.
Thank you very much. I allow one more. I see a hand. I'm sorry, I only see this hand, so somewhere there. So the others, I'm sorry for the light, please. Sorry. Yeah, please. Please identify yourself.
Yeah, thank you. My name is Seto, Bank of Ghana.
Oh, but that's not about accounts, right?
Not accounts. It's with financial inclusion. This question specifically go to Dorothy from the World Bank. I noticed from the Global Findex report that some of our members were not captured in the report because this database is a very essential database for reference. And another thing I have noticed is that even though we are all enjoying that, or very happy that we have moved from the whole global index from 62% to 69% in 2017, I have also found that some countries are also losing inclusion. There are some few of our members, if you look at the Global Fidesz report critically, there is some form of exclusion. Their level of financial inclusion in 2014 has declined in 2017. So the question I wanted to ask you, how can you work with AFI to ensure that the next release, those countries that are not covered in the database will be covered, so that it will provide a good reference point for all of us? The second question is that those countries, even though we are all enjoying that the index has moved from 62% to 69%, a lot of countries are also losing. What will be your message to those countries at this forum? Thank you.
Thank you so much. In order to accommodate my colleagues' requests, I'm going to find an elegant way to, I hope, elegant enough to close this. And the responses from the CBK governor and from Dorothy will be their last statement. So we will then continue with a future question, which would be the last remark from Tanya. Now, Tanya, I hope this is politically correct and okay that I mention that you have a past before GIZ. And for those ones who don't know, Tanya Gönner, as far as I remember, was Minister for the Environment in the federal state of Baden-Württemberg. So this is a surprise question, so I hope you are fine with that. AFI is now embarking on a work stream, climate change and financial inclusion. And perhaps you still have this other heart beating in your breast. So does that resonate with your overall approach? Do you think climate change and financial inclusion is something we should pursue?
Well, first of all, yes, it is always, I have this heart on my mind. And I remember that you mentioned it before in your opening speech. But to be honest, I'm not an expert on financial inclusion, and I know that I'm pretty not sure if I have the right idea what it is, how it could fit together. But yes, I think we have to think about that, because climate change is one of the huge problems we have to face as the whole world, especially because of we in the industrial countries did what we did in the past, and now a lot of you and your states have to face with the problems. And because of this, I think it's really interesting to think about what could be there, the ideas behind. We also discuss about insure resilience. That means how could we help with insurances? And if we discuss about insurances, then I think we are in financial inclusion. And because of this, yes, I think it's right that you as AFI think about climate change and financial inclusion and what does it mean. But I'm really not sure if this has to do something with regulation, or is it only to set the task on the agenda. And there I can only say yes to it, because we need that, and it is one of the biggest problems of the humankind, how to deal with the climate change.
No, but I think your response, I think, is almost what we also put into this project proposal that we sent to the German Ministry for the Environment, who is now actually happy to support this work stream. But thank you very much for your response. Maina, the way forward, you have talked about some of these risks, particularly on fintech for financial inclusion. What are your takeaways from what you have heard so far in this forum? What's next for Visa?
So I think it's been very well said, conversations yesterday, also today, that we want to look at risks, but it's not about preventing all risks, it's about managing risks. And risks are nationally defined, right? If we think about the FATF process, that begins with the national risk assessment, and that goes back to what national goals and priorities are in a whole array of issues. And certainly enabling a community and a society to develop and grow is very important. And we can see how access to diverse financial services is a key input to individual well-being, the Sustainable Development Goals, and also GDP. So, on going forward, how do you manage those risks? One of the things we promote and do is the adherence to agreed upon and continually evolving international standards is a really, really good way of doing that. It's a common set that everyone can provide to and builds that rigor. I think very specifically the 4 things that we do, that we encourage others to do, is think about protecting data, devaluing data, harnessing data and analyzing it around risks, and then also empowering consumers to protect themselves. But it's continually evolving, and then the last part is building capabilities. Capabilities of government, regulators, other providers, capabilities of financial service providers, capabilities of consumers. And that does take a lot of effort, and it's very, very quickly changing.
Thank you. Thank you so much. Governor Brau, from your national strategy, we have learned that there's an ambitious path forward. Where do you want to be in 5 years in Timor-Leste in financial inclusion?
Well, we have set the target in the national strategy, but we would like to see society that integrate into the system that can contribute to the development of the country. This is something that we would like to see. Of course, in the next 5 years, we have said that at least 80% of the population have access to the basic financial services. But we are not only target those that normally we talk, the adult population. We are, since 2015, we are targeting on the kids, because those are the generation in the future that will benefit and use all these initiatives that now we are launching. So in the national strategy also we focus on the sort of unattended segment in the society, which is young adult that start from 17 to 30 years old. Those in our last supply survey, the data that we collected from the financial institutions, we realized that those in the young adult in those age, in fact, less than 10% they use the banking service or have a bank account. This is something that's very interesting. Probably this has to do with the unemployment rate that is relatively very high in Timor. So this is something that we would like to see, and we would like to, we have to make sure that when we complete the first phase, we already reach at least 80% of the whole target. We put focus on the consumer protection, the market conduct. This is something that we will put a lot of efforts. Digitalizing the service, that is something in our priority, although we are working on the transition, how we should deal with those, the 30% that they don't write, they don't read. So again, but we see there are a lot of opportunities, particularly take the opportunity, I mean, using AFI. AFI always, in Timor, we always make joke that if you have travel, call Kiel. I mean, the Kiel, it means that call Eliki or Nix. To ask for sort of direct to other central bank colleagues. But this is something that we really, as I mentioned, our target is now start not only those the adult one, but the children and those 17 to.
Thank you for mentioning this last aspect. Dorothy, you got 2 substantial questions from the colleague from Ghana. Do you think you can manage in 2 minutes?
I'll try.
So thank you for that question on the Global Findex database and how we collect data and what the trends really say. So let me first talk about the countries we cover in our database and why it is that we cover the countries we cover and not others. So we in the Global Findex database cover over 140 countries. In 2017 we had data for 144 countries. So that covers, in terms of population, about 98% of the world population. Now, of course, there's a lot of smaller countries which are not in our database. And we would like to cover them. Of course, we would always hope to cover more countries than we currently do. But the reason we don't is that the Global Findex database really piggybacks on an existing survey called the Gallup World Poll, and they go into 140 countries, and so we include the Global Findex questionnaire in all those countries. We've in the past been in talks with specific countries, including groups of smaller countries, to be able to include them. I mean, it's an issue of funding often, and so, if anyone has funding there for us to go into additional countries, we'd be very happy to do so. So, if there's any interest there, please contact us. We're always happy to, expand our data set. I will also say that you notice that a couple of countries are not covered in every single Findex round, but only in, 1 or 2 Findex rounds. And the reason for that is that Gallup, as part of its Gallup World survey, doesn't go into every country every single year. So some of the smaller countries are on a 2-year cycle, which means that the Global Findex being happening every 3 years means that some years we manage to go into a country and the other year we don't. But we certainly hope to go into as many countries as possible, and so we always look for ways to expand our coverage there. On the second question on, does financial inclusion actually, has that decreased in a couple of countries? So the short answer is that not really. We see in a handful, but it's really just a handful, and actually I think it's only 4 countries where we see a significant decline in financial inclusion in the past 3 years. And it does happen where, for a variety of reasons, we would speculate that has happened. One of them being if trust in the financial system erodes, you would, expect people to maybe not use financial services anymore and close down accounts. But by and large, we don't see a decrease in financial inclusion. In most countries, we survey over 140 countries, we've seen financial inclusion either hold steady in terms of account ownership or increase. So one of the reasons for why you might have the impression that financial inclusion decreased in more countries than the 4 or 5 that I've just mentioned is that we're a survey. So we survey typically 1,000 individuals per country, but by the nature of being a survey, it also means that there's a margin of error. So there's a certain interval of uncertainty around that. And for most of our countries, that's between 3 and 4 percentage points. So that means that if the number for 2014 and 2017 is, the difference is, 2-3 percentage points, statistically speaking, those are the same numbers. So, our line is that those numbers, and, that statistics is that the numbers are the same. And so there's certainly a couple of countries where financial inclusion in terms of account ownership hasn't moved, and that's that. And then I want to briefly come back to another point where we talked about the usage of accounts. And I appreciate the comments that the other panelists made earlier there. And certainly, I think we need to look at account usage. It's not, having an account is an important financial tool. It allows you to save, make transaction, in the end provides easy access to credit and so on. But of course, account ownership only matters if people use an account, right? Account ownership is not an end in itself. It's a means to its an end. And so certainly we hope that countries such as India, which I mentioned earlier, which saw great increase in account ownership, but very little use, that countries where use is slow, that increases over time. But I think the message over is that, one size doesn't fit all. Different countries are at different stages of financial inclusion. So some countries, I think, the focus still is very much on how can we increase account ownership. In other countries, it's how do we increase use. And it's not just India, where account use is relatively low. It's also looking at countries which have achieved great account ownership, where we still see a lot of payments happening in cash, where we can ask, how can we digitize those payments and bring them into financial systems? So, one of the data points that the Global Findex survey collects is how people make payments for utility bills. And there we see that today, still, we have 1 billion adults with an account today who make those payments in cash, right? So huge opportunities across the board.
Thank you so much, and I think AFI network would be particularly supportive, seeing usage taken more into account, when it comes to Global Findex. Dr. Patrick Niroga, I think you are the last one to speak, and the wonderful question you got from the colleague from Sri Lanka, I think, enables you also to make a final statement, which I think can also be something we take away from this session.
Thank you, Fred. With regard to the question, yes, we launched M-Pesa in 2007, and in 2008, we actually put in place the Microfinance Act. So we launched the microfinance, or framework for microfinance institutions shortly thereafter. And today we have, I believe, 13 institutions that are licensed in this way. But what is clear is that the population really voted with their feet, meaning they wanted to be unshackled from the brick and mortar sort of environment. And I think it's clear why that may be advantageous in terms of time, in terms of location. So digital, moving to, let's say, agents was a much better solution for them. So anyway, it's just that the success of it has really been more from a demand side as opposed to the supply. Supply has been there, but demand has really gone in a particular way. So I hope that answers your question, and we could have more conversations offline. But in terms of the summing up, if you may, I think there are two things I would want to say. First, it's clear, going back to the theme of the conference, of the meeting this year, from our perspective, it's very clear that fintech offers us as a people the greatest hope for aligning ourselves with the objective of deepening financial inclusion and also shared prosperity. This is a thing which I think most of us as economists or as policymakers need to go back to. I mean, at the end of the day, we are not just having financial inclusion to have numbers rising. At the end, it goes back to the people. And we need that those that are excluded are benefiting or sharing more in the prosperity that is being generated in our nations. I would actually, as a footnote, if you may, in some of our central banks, they have now changed the acts or the charters and included financial inclusion in them. And that is a big step in the last 10 years. I'm not saying that that's the best way of doing things, but I just want to say that over the last 10 years, this element of shared prosperity has come more and more to the fore. I share the comments that were raised by the other panelists in terms of how to improve the concerns really about fintech, data, and things like that. But one point I want to underscore is that the use case needs to be underscored or needs to be highlighted. So not every single fintech product is viable or should be supported. And we should begin again from what is the use case? What will the consumers, how will the consumers benefit from this? And then deal with it. I mean, in a sense, one has to, in regulation, you think of risk-based regulation. Well, even here. So fintechs that really are just improvements, third-order improvements on something, well, they shouldn't occupy too much of our time. But there are many other products that may push, let's say, our objectives, and there's a clear, concise use case. Those should be supported. Thank you very much.
Thank you very much.
Sorry,
I
can
think
I
my
also
hope
comment very briefly?
was
Hello?
fulfilled. I think that was a very great statement. I'm not going to add anything else.
Hello?
I wanted to thank everyone on this panel for making this a very lively discussion. Thank you for your contributions, for your insights, and also for the final guidance that we received from your end, Governor. I think we should give a hand of applause to this panel. Thank you very much. And yeah, financial inclusion takes time. We have the moderator. Thank you. Thank you so much.
Ladies and gentlemen, can we also give a round of applause for our moderator for this session? Thank you so much again to our panelists and our moderator. We'll excuse our panelists from this session from the stage, and that will allow you an opportunity to quickly go onto the app and please fill in the evaluation for this session as well. Let's give them another round of applause, please. Again, ladies and gentlemen, we'd really like to hear from you. Your comments, your feedback, and of course the app has made things very easy with regards to giving your evaluation. We'll move straight into our next plenary session. Our next session is Russia Experience and Journey in Financial Inclusion Strategy. So, ladies and gentlemen, in a minute, I'm going to invite our speakers for the next panel to come up on stage. We thank you all for filling in the evaluation. Our panelists include the head of the Service for Consumer Protection and Financial Inclusion, the Bank of Russia, Mr. Mikhail Mamuta. Let's give him a round of applause. We invite our panelists to make their way up on stage. Andrei Melnikov, the Vice Chair of the Association of Banks of Russia. Our third panelist is Mr. Viktor Dobrovin, the Deputy General Director, Sberbank Insurance LLC. And our fourth panelist is Mr. Viktor Klimov, the leader of the Borrowers' Rights Project All Russia National Front. Ladies and gentlemen, I hand this plenary session now to our moderator, Elman Miktiev, the board member and National Association of Professional Collection Agencies. Let's give him a round of applause.
Good afternoon, ladies and gentlemen. Добрый день, дамы и господа. Я прошу извинить.
Good afternoon.
The session is about Russia, and you see all members of the session on panelists from Russia. I will switch into Russian. Okay, thanks a lot.
As a professional moderator, I found it very hard, this task. Sorry for this very big distortion of schedule. This should have been launched, but Mr. Hennig taught us a great lesson. He told us, well, I have a 90-minute session, well, we have a 60 minutes, and depending on how fast we manage to explain the topic of our panel, well, maybe we'll find a bit more time for our lunch, for networking and socializing. So, once again, let me briefly reintroduce, I guess everyone knows Mr. Mikhail Mamuta, who is not only here as a representative of the Bank of Russia and the head of the service of the Bank of Russia, but also thanks to him that you're here, because last year it was thanks to his initiative that a decision was made to hold the anniversary forum here in Sochi. Thank you, Mr. Mamuta. Andrei Melnikov, a person who's got... how many years of experience do you have? I guess like 2 decades or something of experience in the banking system. Sometimes when I asked what is the Russian deposit insurance banking, I often call it Russian FDIC, not only in terms of paying upon the insurance claims if a bank goes bankrupt, but also in terms of analysis, So Andrei has a great understanding of the banking system, not only because of working with the banking association, but also because that's what he did for his job. Mr. Dubrovin represents Sberbank Insurance here, and my personal evaluation is that the Sberbank that we used to know 10 years ago, including Sberbank and Sberbank today, are they're not just worlds apart. Nowadays, Sberbank Insurance sets the standards for the whole market in Russia when it comes to consumer protection and consumer awareness. Now there are very vivid discussions on how we prevent mis-selling of insurance products, and we should express my personal opinion. When I looked at the internal standards of Sberbank Insurance for selling their products, well, I guess that's it. We don't have to make up anything new. We don't have to reinvent the wheel. It's good. And Mr. Klimov, another panelist, well, the question may be, what is the judgment of the project for the borrower's right? But in Russia, we have an all-Russian National Front. Well, and Victor used to be an MP in Russia. He headed a special project within the All-Russian National Front, the project for the borrower's rights, and is not simply represented the consumers here. I'll express my own opinion. In the last few years, we have managed, the bankers, the financiers, we have found Victor to be a person with whom we can deal with, because we are a very young country in terms of our banking history. Most countries that claim to protect the rights of consumers are generally just end up just bashing the banks. And Victor, let me just add two little brush strokes. That's all. Victor was the person to really push the project for the law for financial inclusion. And Victor is also a person who sometimes just really likes to surprise us, like the president's instruction to reduce the debt burden. Like the banks aren't particularly happy about such instructions, but if a certain person brings these instructions, we see that it's not just instructions, it's what the market needs. So I guess that's it with the introduction. We need all the time we have. So, Mikhail, would you please start, before we start expressing your opinion, the regulator's opinion on the situation in Russia? Let me once again, maybe in a continuation kind of what we have just discussed, the Findex, I looked up the methodology, the Russian methodology for the last year. I can look it up right now, or you can trust me on my word. And it says there that the methodology used for Russia was, ended up showing that about 20% of the population of Russia is actually, was not covered by the recession, not 2%. It's not just some statistically insignificant number, 20%, and it's a bit of there's this was called in English translation far north, far east, the North Caucasus region. I don't think that these regions account for 20% of our population, but there's another question I have. The question is, well, if you read this methodology, you see that the main problem for financial inclusion in Russia is the territorial problem. Do you agree with this? Is this the main issue for inclusion in Russia? Or maybe we have some other issues and the territory is just one of the aspects. I guess you have a presentation on the topic, don't you? Yes, I definitely do. So if you don't mind, I'm gonna use this pulpit to speak. So
We welcome you again in Sochi. Really happy to see you all here. Let me just gratitude this one more time. I have a pretty challenging task, in my opinion, to stay between you and lunch. It's always not easy, but I'll try to do my best to be short in my speech and leave some time for discussion. И я буду, just because it's official language of Russia. И thanks very much for the interpreters for very nice translation.
So Elman asked me whether one of the problems for financial inclusion in Russia is about territorial. So one thing that may some people will be news to some people. Russia is actually quite big. The territory is quite big, and this does present a certain challenge when it comes to financial inclusion. But before we move on to discussing how we address this issue, I'd like to say make a few more general statements regarding the long way that Russia has made over the last 2 decades, and what we have achieved on this way, and what are the challenges that we still need to address. Since our section is called the Russian Journey to Financial Inclusion, every journey has to start somewhere, and it started somewhere like 20 years ago when Russia entered the era of market transformation. Let me remind you that for more than 70 years we had no market in Russia. There was no market of financial services. We had plain economy, there was a distribution economy, and people just basically had no financial services. Well, maybe some people did, but they were disposable. So there were no problem of financial literacy or financial awareness, no problems of financial inclusion. There was little finance. And then it all changed overnight. Like, there was no more socialist economy, we moved on to the market economy, and this required Russia to react swiftly in this situation of modernization to transform everything. First of all, we had to introduce laws that would regulate the activities of various financial institutions. And literally in a decade, we have created a legal framework that started with the banking laws that was introduced somewhere around 1990. In the next decade, we established basic insurance legislation. The first microfinance organization emerged, then electronic wallets, credit organization. It all was developing very quickly, and by the year 2010, and that's quite quick if we think of it in on historical scale, the path that many countries have made over decades, over centuries. We had to make it really fast, and by the year 2010, I think we have created a legal framework that was regulating financial environment. We created environment for e-wallets, basic legislation for the national payment system, for the financial technology. And what's especially important, in the year 2013, we made a decision to use Bank of Russia as a basis for a mega regulator that, starting with the year 2013, we're responsible not only for regulating and supervising the banking market. Now we are a mega regulator, and we are regulating and supervising all of the financial markets. And there is a great advantage to it, because we can see the bigger picture. We see it both in terms of banks and in terms of non-banking financial institutions.
But when we began this way, we understood clearly that we cannot limit ourselves only by the supervision of financial institutions in terms of their prudential stability. Being a mega regulator also means a lot of social responsibility. So it's impossible to separate regulation and financial markets development, and as well as the financial consumer protection, generation of more favorable environment for the consumers. And it all is aimed to solve the fundamental task of providing equal access to financial services for all population of the Russian Federation. That's how Bank of Russia understood that financial inclusion is one of our main goals, in fact, and consumer protection and financial literacy are two of the dimensions of the financial market that are inherent to financial inclusion. All our experience, and I think that you share my opinion, says that too much effort only on the rate of increasing financial inclusion and expanding access to financial services without paying the due attention to the market developments, to financial services quality. And if we don't strive to make these financial services easily accessed to the population, such financial inclusion can be dangerous. And that's why we should consider as a whole the development of financial markets, increasing financial inclusion, financial literacy, and consumer protection in tandem. In 2014, we became members of the Alliance for Financial Inclusion. We made this smart choice because we understood that on our own we cannot solve such difficult tasks. And we had to share experience with you, dear colleagues, to study the success that you've made and how you solve the problems of financial inclusion. Of course, all countries are different. There are big countries, small countries, island countries, and countries they take up the whole continent. But as strange as it may seem, we all have something in common. Later I'll come back to it. But Russia, in some of its parts, is also a lot like islands. For example, North East Siberia, Far East is the territory where the distance between cities and villages can be up to hundreds and thousands of kilometers with no well-developed logistic infrastructure, and getting from one village to another may be even more difficult than in Philippines or Maldives to fly from one island to another. So learning the international experience allows us to find more efficient ways to solve financial inclusion issues. During 2015-2018, Bank of Russia, together with the government, developed a set of strategic documents and regulations aimed at solving these issues. First of all, those are the strategy for financial inclusion that we approved this March and which define the main work streams. But besides this, last year we adopted a joint strategy of the Bank of Russia and the government of Russia in terms of financial literacy increasing, which creates the systemic foundation for financial literacy to become a part not only of educational programs in schools, universities, even kindergartens, but as a part of day-to-day life of common people. And I will also say once again that it's a very important part of our work. And besides, the government, together with the Bank of Russia, has developed and approved the strategy for consumer protection, which pays a lot of attention to consumer protection in financial market services. The last that I want to mention here is the Bank of Russia strategy in fintech development. I will not go into detail for this because today we'll have another plenary where Olga Skorobogatova will go into more detail about the fintech contribution to financial inclusion. It's important to say that we deem fintech as an integral part of raising financial inclusion. It's important that fintech helps achieve financial inclusion goals, because fintech development separately doesn't mean the engagement of unbanked people into the system. It may be just raising the quality of access for those who already have it to make it more comfortable and faster, but it won't solve the financial inclusion problem. So we need to make lay focus here on the solutions that help us to include the unbanked categories of population. Three main strategies that we call three work streams: financial inclusion, financial literacy, and consumer protection. Each of them has, they interact and complement each other. As for financial literacy, right now, We are actively working with the Ministry of Education, and I know that many countries follow this very path because the foundation should be laid in school and even before school. We just launched educational program on financial literacy aimed at children from 5 to 7 years, those who are still learning these aspects in kindergartens, elementary schools, and we want such programs to be a part of the educational system in Russia. This is an achievable task. I think by the end of next year we'll accomplish it, and it will create a good foundation for today's schoolers to become literate people tomorrow. Besides this, we actually work on the development of mobile apps that will help people not only also to address the Bank of Russia in terms of the financial services, will decrease the risks of abuse of their rights, of fraud. We are ready to be consultants. It's very important. The Bank of Russia is not just a regulator, not just a body responsible for development. We are also consultants. We talk to people every day. Each year, the Bank of Russia answers more than 250,000 of inquiries of our citizens. We also, together with the financial organizations, insurance community, banking community, need to work on this. My colleagues are here. They will talk about it. The initiative is a private-state partnership in order to achieve financial inclusion on the state and private sector. And last but not least, the priorities of the financial inclusion strategy. We have two priorities. The first, for those who already have internet access. Internet coverage in Russia is more than 70% of the need, so more than 70% of population have more or less stable internet access. As for this group, and this is the mainstream, the main decision for financial inclusion is fintech and generating comfortable, convenient channels for getting different kinds of financial services, interact with us as a regulator, increase their own financial literacy. And this work is done by us quite actively, including in terms of the fintech risks, those are cybersecurity, personal data protection, and much more. But besides those 70% of the population that already have internet access, there are 25% who don't have it. And those are mostly people who live in the villages, sparsely populated regions. We cannot forget about them. We cannot only lay focus on fintech. We need solutions that will allow the person in any point of our country to get financial services that they need. So a single priority of the strategy is raising financial inclusion in small cities and towns, as my colleague mentioned. And here there's a set of interesting ideas. I will present them shortly. We also saw that inclusion issues are common among disabled people because this financial environment is not adapted to them. They have trouble using the normal channels like bank offices. Online banking is not always adapted to people with poor sight or hearing. Another problem is the multi-factor identification. For this, the person needs to have good eyesight and hearing, and all their everything else good with their health. So we need to solve this problem as well. And another challenge for financial inclusion for SMEs. I know that many countries deal with this. SMEs in the whole world is underfinanced, and Russia is not an exception. We do a lot, and we try to do more in order to ease the access of SMEs to financial resources. But this task is far from solving. And here, exchange of experience is very, very fruitful, and we are happy for this. As a whole, use of main financial services such as banking accounts is on a quite high level. Also, we measure level of satisfaction of population with financial services using international methodology. And this satisfaction is rising. Mainly, we believe, thanks to the work that we do. In fact, the index is, the lower it is, the better. At first, you think that the situation is worsening, but in reality, it's the opposite. But still, as I said, about 20% of population is the part that is not actively engaged in the financial system. As for disabled people, as a very vulnerable group, we have a roadmap that is aimed at systemic solution of this problem. Not just a one-time solution, it's meant for 10 years, for several years. Ministry of Social Development, of Building and Utilities also participates. But it's important that the people with disability, they should be the experts. They need to tell us what they need and what they lack. I think our work should be based on the challenges and the problems that they face, and the assessment of our efficiencies, whether we've managed to help the specific person or didn't. I deeply believe that we can talk about the success of our strategy if not 70 but 99% of the population in our country can say that, yeah, we are satisfied with the quality of the access. As for SMEs, right now, these days, the national project on SMEs development is finalizing. This topic is in President's attention. It will be a large project where the Bank of Russia is supervising the financial instruments for SMEs. Our logic is quite simple. SMEs require the full-fledged acceleration system. It means that on each level of development, there will be, starting from startup, ending with the medium company, there should be financial lift, investment lift, which you can take and go to the next level of development. So you cannot only lay focus on one financial instrument, you need to use the interconnected financial instruments oriented at the certain level of company development, starting from the micro company, microfinancing, crowdfunding that we pay a lot of attention to right now, development of guarantee fund. For Russia, it's another great task that we solve, and of course the equity market, IPO, maybe ICO in some regulated area, so that a small company could move up. This is the aim of the national project in terms of financing, and I hope that soon we'll approve it and we'll have 6-year base for systemic development of this area.
And finally, the smaller towns of Russia. I'd like to say a few more words about this. There is a great disbalance. Our governor, the Bank of Russia governor, has mentioned this 2 days ago. 95% of Russian towns and cities have full access to financial services, and 95%, almost 95%, of small villages, rural communities, where the population of 100,000 people have almost no access to this service. Of course, in bigger figures, there's not too many people live there, but still there are millions of people who need such access. And we pay a lot of attention to the experience of our colleagues. We visited Brazil, we visited the Philippines, India, China, have seen how other countries with huge territories address such issues. And I'd like to thank the Alliance once again for providing this platform that allows us to learn the experience of other countries and their best insights. And we have elaborated a real strategy working with small communities. That this is the essence of it. I'll show you a small slide which shows you how unequal the density of population is in Russia and how it correlates with the density of access to financial services. You see, the Siberian forests aren't densely populated at all, and the density of banks per 100,000 people is also very unequal. There are regions that are well equipped for this, there are regions that aren't as well equipped in this sense, and this picture shows us that there is no single solution that would help us address all issues in all regions. Each issue should be addressed case by case. The southern regions need one kind of solution, the far east needs another kind of solution. But our systemic plan is to make it easier for banks to open new offices. We want to actively create, develop bank offices based on the Russian post infrastructure. We have launched the Post Bank in Russia, which is post offices as a basis for bank offices. There is active collaboration between banks and retailers in smaller towns, at least for banking, basic banking transactions. Certain collaborations with local administrations. We have learned a lot from Brazil in this respect, and by using this agency banking, we create collaboration between banks and various non-lending financial organizations and other participants of the financial market. We should combine all of these efforts, all these approaches. That's the only way we can address this issue. We also have an interesting collaborative project with satellite TV providers, because satellite coverage, well, it basically covers all of Russia's region, even regions where there is almost no mobile communication. And we're piloting a project in the Far East when financial service can actually be provided via satellites. So that's very interesting. It's not as expensive as it may sound, as it may look, because the cost of satellite TV has dropped. And if you have satellite TV, well, you can just use a special app for this, and then you can acquire any basic banking services. And we're planning to address this starting this year. And so for each of the three key areas of our strategy of financial inclusion, we have very concrete objectives, that they're very measurable targets, and that we can assess how satisfied the population is. For smaller towns, we want to increase the inclusion at least 3 times. For smaller businesses, it should increase by 1.5 times, both in terms of lending and payments and other important bank financial services. Finally, for the people with special needs, we should create a truly inclusive financial environment that would, as I have mentioned before, and we are working on this very actively, and we are going to measure how effective this work is ongoing. Not only we are going to do this, we'll collaborate with public institutions, with social, non-governmental institutions created for monitoring the quality of financial services. And let me emphasize once again, this can't be done by the central bank alone. We can only do this by combining our efforts with the financial market, with the banking community, with insurance undertakings, with microfinancial organizations, and without any doubt, we should really cooperate with the people of Russia. And that's what I meant to tell you today. Once again, thank you for all of these exchanges, for all the lessons we learned from you. And we are also ready to share our own insights, our own experience, what we have achieved, something that may be of use for you. So anytime and under any format, we are ready to continue our cooperation. So thank you for providing me with this platform. So Mikhail, thank you. Thank you for this amazing delivery, because you have resolved many issues of how we move on to other issues. So when you were finishing, you mentioned that this can't be done without the market participants, but before that, you've also mentioned a very important point, that basically there are 3 key objectives. First, the technology. Second, it's the regulation and stimulative regulation, including stimulators. And there could be a combination of the two, but the SMEs provide a special issue. Well, if you don't mind, I'll allow you to drink some tea, get some rest, And then while the market representatives will be more active, not only professional market participants, but also on the consumer side. So my first question is to you, Andrei, as a representative of the banking community of Russia. What are the technologies, and in which way the technologies can help banks address the issue of financial exclusion? And do banks need this, actually? Obviously, the banks need this, because this means new clients, and everyone needs new clients, so, like, it's clear. I believe that probably... I guess I'll refer to results of a survey that we have once conducted in our deposit insurance agency. Like, it was 10, 12 years ago, I guess. They looked into the preferences of the banking clients when choosing between banking offices in big cities. The first criterion was the price of the services. Second and third places, how convenient it was to get the service. And third, surprisingly, whether there was a parking lot nearby the banking office. Today, now that obviously, like, our whole world can fit in this, in our little gadgets, online banking systems, and well, the criteria 2 and 3 aren't as important as they used to be. So for the banks, they have to really switch their priorities very fast. So there is no focus on brick and mortar offices, and now the focus is on providing services online via electronic channels, and to open and banking office in Russia in a rural area. Well, there is a sort of, well, if it's under 10,000 people, it's not economically viable to open a banking office in a town. Like, no one would do this. But if we provide these people with an electronic channel, these 15,000 people become our clients. Well, obviously they have the skills required, and that's what the banks are aiming to do today, to expand the scope of services throughout Russia, which I believe, one of the biggest problems is the communication channels, because our country is, well, big and many towns are very remote. So it's not about the technology, it's about the infrastructure that will help this technology reach the people. Yes, we have the technology, just give it the channel for this. Yeah, thank you. Victor, another question for you. Maybe I'll explain something to our listeners. Well, in Russian, you know, the Russian word for insurance is based on the word fear, strach. So that's why the concept of fear is the core of insurance in Russia, and maybe that's one of the reasons why insurance is not very popular in Russia. And what you're doing in your company, Sberbank Insurance, Sberbank Life Insurance, is one of the most slowly developing sectors of Russian finance. Will the new technology make this kind of financial source more inclusive, more accessible? Well, what's the secret about promoting it further? Thank you for this question. That's true. I think it's become clear that life insurance, life insurance is one of the financial services that is very hard to develop, because we understand very well that coming to a lending institution, to get a loan, to create some legally required insurance like motor insurance or for direct needs of a person, well, people have got used to this. But life insurance is a special culture. It's about thinking about yourself, about your future, about your next of kin, and it's much harder to introduce. And we see very clearly that even though we've heard about this, even for lending institutions, it's quite hard to follow the path of financial inclusion. But for insurance, it's even harder, because at the end of the day, still it's a different financial institution in terms of their capitalization, in terms of their development, and still we have to catch up with the lending institutions. And if we look at the technology at a broader sense, life insurance started collaborating with credit institutions to create some collaborative products or using joint distribution channels, which is also a technology unto itself. Once again, we see here that there are certain advancements for life insurance, and we see that life insurance is one of the most rapidly developing types of insurance as compared to other insurance services, which also has a lot to do with the use of our collaborative technologies with banking services. And there may be another interesting example for insurance, I think, and for insurance technology. Well, if we are done, well, apart from life insurance, there is motor insurance. As soon as this service was made available online, we clearly immediately saw how quickly, what a great increase it had for purchasing it online, the moment it was made available using technology, and how we can clearly see that the coverage of this service, how it increased, it became much more affordable and accessible, and before that you could only buy it at insurance offers. So, Mr. Klimov, it's clearly that we, the professional market participants, will probably say that the technology is great, it's amazing, but here, as a person representing the borrowers, the consumers, person who professionally makes sure that we do not infringe upon their rights, what risk do you see? Well, our service will become more affordable, or maybe there's just some risk that we haven't mentioned yet. Thank you, Elman. First of all, for consumers, technology is good too, because you see, it's not only good for the financial institutions that can use the technology to reach out to the consumers, but for consumers it's worldwide. We also like it when we can do instant transactions, we can get information on the fly. We like remote identification, we like the variety of services that we can get, and in general there is a very obvious increase with every day, like this is undeniable. But there is a question that has to do with how the data is treated, the personal data of the consumers, because in Russia, just like in other countries, the use of personal data, the data that has to do with identifying a citizen using some ID documents, or, well, it has been mostly regulated by bank secrecy laws, like how our personal data is used. Well, it's all very well regulated, and in and of itself, it's not a problem. People aren't really worried about this, but there is a big but here. I'm not gonna shake a smartphone again in front of you. So, 12 years ago, my phone, well, there was a password of 8 figures and the name of my cat, just in case if I need to restore the password. A few years ago, my phone learned the number of my banking card. Now it has my fingerprint. Oh, this one. Yeah, this one's more convenient. And now it knows my basic biometrics. It looks into my face. It recognizes me even when I have beard on, when I'm wearing glasses, no problem. And combined with my smartwatch, it knows everything about my health, how much I've run, my heartbeat, and other data. And all of this data, considering the capacities of big data, of processing big data, of unstructured data, it becomes increasingly important today. And I think many people are worried about this. Not only Russian consumers, it's worrying well, it's not only Germans who love cash. Russians also love cash, and many countries love cash because that's not about liking touching paper or metal coins. It's a question of privacy for many people.
So, continuing the topic that Maxim Akimov raised today, and I think it's from yesterday, there is a very important thing. It's not enough to name the citizen as the owner of all the digital data about them. The world, not only Russia, needs some accord that has in return for transparency, the citizen will have some privacy and protection from the case from situation if his or her data may be used somewhere without his or her consent. So this is the issue and task of the state first. And the second, a few years ago, one journalist asked what to do with all the data about the citizens that were leaked abroad and that are stored in the databases of Facebook, Google, and so on. How do we get them back? Think about it, all the how absurd this question is. It cannot get the data back, and it means that the previous remark in terms of the citizen protection from the state, it cannot be solved within one state. It can be done based on the accords about some rules on the international cooperation. So I think it's a very important part that is being voiced in the forum, and it's included to the Bank of Russia strategy and other countries. Thank you. Thank you, Victor. We not only turned the issue around, but you made us professionals think what new can you tell us. But I would like Mikhail to give a short resume and his opinion. Yes, I wanted to say the following. Victor touched upon a very interesting topic. Recently, I heard a conversation of two men. One said, I'm afraid of my smartphone. Literally, these words. It knows more about me than my wife does. The second one thought and said, you're wrong. It knows about a lot more about me than my wife. This smartphone phobia is a current trend, and not only poorly educated people are affected by this, but I have attended an international conference on the personal data protection, and this smartphone phobia also present with the other directors. Some high official has this Nokia, very old Nokia, as his phone because it's calming. It means that we need to rethink the approaches to personal data storage and protection. It's an important issue. Is there the protection of personal data in the modern world? It should be. It's a very sensitive topic, and I want to direct your attention that yesterday we approved the Sochi Accord for Financial Inclusion, and it's very important from our perspective. It not only deals with the input from the financial technology for financial inclusion development, but also about the risks that we need to deal with, and these risks are inherent to the good things. And one of the risks is the need to elaborate new approaches to personal data protection and to the whole topic of big data storage on devices connected to the internet. It's very important for us all to pay attention to this and to join our efforts. Thank you, Mikhail. Let's move on. We don't have a lot of time. Next block we would like to talk about is regulation, and I will not ask the professional participants, but the vice versa, Viktor Klimov. What regulation do you think should be next one for services to be not only accessible but safe? We've talked about data, yes, but let's come back to the financial services. What do you think should appear for us professional participants to increase inclusion? Thank you for the question. As a public organization, we work with consumers. We do some analytical research. One of them is the card for credit and savings activity of households. Our country is very different, and not all regions in climatic and other senses lucky as Sochi. Sochi is very hospitable and warm and economically developed, and in this sense, situation in different regions, not only economical but also in terms of savings and credit and lending is different. What's interesting, there are two types of regions. with the highest lending activity of population, where people most borrow. Those are regions with sustainable economy, developed and a stable salary. We understand this activity. People know that they will not be in worse conditions tomorrow. Regions with the worst economy, close to depression, and there we also see high lending activity. Up to 50% of household income is the debt burden. And this is a concern for us, and what should be the focus of the further regulation, what we as the organization representing the consumers is fighting. We are concerned that these regions, and there is a trend when credits are used not as a possibility but as a need to cover the existing debt, as a means to make ends meet, and it sooner or later will lead to default. So among other initiatives that we have been pushing forward, supported, there was the initiative about the limitation of the increase of indebtedness of borrowers. So the money that has been loaned cannot grow and grow and grow. In the world, there are such practices, and today it's active. We continue to insist on the strengthening this limitation. The second is the limitation of debt burden, to oblige credit lending financial institutions to assess the debt burden of the consumer before giving another loan, and to set some limits. Regulate by coefficients, risk indicators, but chasing the income, it's important for financial institutions not to drive the consumers into debt burden. And the third moment, it's been mentioned before, this is the institute that for more than 4 years we've been trying to create it, thanks to the Bank of Russia and everyone in the first discussion. This is the financial ombudsman that's today, not only in Russia, but in other countries. It will defend the consumers in disputes with financial institutions in a certain frame, but it will be free for consumers, and it will allow them to defend their legal financial interest. It's very important. I think it's what we expect from regulation, what we're trying to achieve working with the regulator and with the insurance and banking community. Thank you very much. Andrei, what does the banking community see? What should we do to make services more affordable? I think I have some professional deformation, because when you say regulation, I think first about the de-risking, the limitation of risks. And from my point of view, I think this is one of the main tasks that any regulator does, both in terms of the limitation of market participants' risks and appetites, and for consumers. The same problem with the indebtedness. But the regulator, in a wide sense of words, another work that our central bank and the government is doing, it's creating some platform solutions, new environment, if you may say so, for certain deals. For me, this is my assessment. This is a phenomenal step for future when we launch a wide national remote identification system. Next, we will receive not only financial but all, including state services, using biometrics. It's a huge project. We can't even fully comprehend it. The same way the state can create systems and platforms that drive the market forward, that market participants cannot do on their own, only using the cooperation of state and participants. Thank you, Andrei. Victor, what about insurance? What do you need to be luckier, happier? First of all, thank you. We have enough of regulation. There are two aspects. The first is very positive. The amount of regulations that the regulator has done recently, and we've heard about it in terms of digital technology and Mikhail's presentation, it allows the business to feel good, and it's a good thing. But the other side, the bad side, so to say, when we talk about financial services and inclusion, we only talk about the first part, like selling the financial service, like selling insurance policy. But if we talk about the real insurance of life, the long term for 15-20 years, during this time, it will go through different stages when the person can do some activities with the policy, when some insurance events can happen, and it's also the part of the financial service, and there should be some regulation that will allow the people to get rid of needless documentation workflow. If there is some terminal disease, the insurer should get the information and do the insurance payment without the collection of necessary documents and certificates. And such aspects connected with the lifetime of the insurance, there are multiple, and this is a good work stream for regulation. Thank you very much. So let's come up to the most complex block. We mostly talk about individuals, but it also has to do with the SMEs. We know the Bank of Russia position. We know, Mikhail, that you're very actively participating. You're leading in a lot of projects that help SMEs. But when we look at the statistics, almost 90% and more of funding it's not beneficial. It's the standard borrowing through banks or other programs. So my question to Andrei, what does the banking market need in order for the borrowing funds to be accessible for common people? You said a very good thing, and I wanted you to talk more about it. Professional deformation makes us talk about risks, first of all. What with the regulation of risk should be changed for us to become more affordable? Some were maybe too much, if you can say so.
Well, I tried to bridge these professional distortions with my own experience as a Minister of Economic Development of one of Russia's regions, where 90% of businesses are SMEs, and here I have to fully agree with Mr. Mamuta that today under the new low interest rates there is acceleration of business. That the acceleration of business should be our number one goal. We shouldn't subsidize interest rates as maybe we tend to think. We should help grow the business at various stages. We need a more mobile and a more expanded system of guarantees, because the very first stage, when you establish a business and an entrepreneur comes to a bank, but he's got no collateral, you can sort of tweak the regulations. We can change the approach to project financing. We can look at this small enterprise as a project financing, but that's not a sustainable solution. We need to create a situation in which this starting entrepreneur should be helped. That's why we're using the guarantee funds at the federal level, at the national level, using regional funds. We use this is the basic level, and then these people need to be taught how to create their business plans. Every generation has to be taught to do this. We need to teach them how to sell their products. These are skills that you can acquire, but you can also learn them. And that's also a very important task that we're working on. And at every level, these tasks change, like for selling products, because in Russia, for small enterprises, that's a big problem. This can also be solved by, sometimes there can be administrative approaches, they can, through quotas, but that's the situation. And therefore, in this case, I think I would set the goal of more like helping the enterprises and teaching them how to sell their products, their goods and services. And then the banking finance becomes more accessible by design. Now, well, if we look at the scale of lending without any collateral and with collateral, they can't even be compared. I don't want to say that the state funding is just a drop in the ocean, but it may look so if we look at the figures. Well, if we look at the access to banking services, we'll see that many of us, many SMEs, well, I mean, the access is limited. There are many programs conducted by banks as pre-packed products. Like there is a term of like a button term. You push the button, you get the services. That's not a problem really. Well, the problem is who do we lend to? We need to take we need to assess lots of SMEs, sometimes very small enterprises, and that's a totally different task. Okay, maybe we'll discuss this task next time, sometime. And Victor, for insurance, working with SMEs, making the consumers happy. What do you need to change to make your services more affordable, more accessible? I would agree with my colleagues. I do believe that we lived in a wrong paradigm by offering investment products, but now we have a clear understanding that we shouldn't offer investment products. We should offer solutions. We should offer our help, our assessment, something more systemic, because SMEs in general, there are a lot of tasks that they have to keep in mind that are very complex, and they have just no time, no capacities to focus on insurance and other issues. And there is a very clear tendency to offer solutions products that combine help to business in certain related areas, like working with employees, insuring the employees, and insurance products that like ready-made solutions that also help to address some other issues of the enterprises. Victor, would you agree that things are so good? Just the consumers, that the SMEs just need to work better, and that's it. Or maybe your previous experience shows that it's not as fine. Well, I think your question sort of pushing me towards talking about problems. Well, I have good news, I have bad news, and there are good things and bad things. Let's start with the bad news. It's clear that if we look at the inclusion in general of the financial products of funding for small businesses, especially for micro businesses, like this is like 95% of all companies in general. Well, as of now, they aren't, well, they're just objectively inadequate to the requirements provided by the banks and regulators. They just don't fit in to this criteria, because that's the kind of business they are. There are so many things going on, like various agreements. Sometimes they just have no skills, no capacities for keeping the books, for keeping the reporting in the necessary way. Sometimes they try to reduce their reporting, then they find out that the banks need more reporting than they have. And unfortunately, we have come to a conclusion that the stimulating projects of funding SMEs are now sort of work in the reverse way. They support those who would have had their loans anyway. They support those who already fit the criteria. Now it's just even easier for them. It's better for them. It does accelerate business. That's a good thing, but the micro business, well, they just skip the banks. They pretend to be individuals. They get individual loans because it's much easier for them. This way, it's more convenient for them, and that's a problem. and that the working group, that the Bank of Russia, that our government, well, we really need to address this, like bringing together the facts on the ground and all of these requirements for transparency and reporting. But there is good news too. A very important point we have mentioned that the government is doing right now under its digital economy program is the issue of giving legal power to the data registers. It's a bit complex, but I think we understand what I'm talking about. Like the legal power is given to the entries to the digital registers. No more paperwork resulting from addressing this data. And it makes things so much easier. Many opportunities. Online you can get some information from the government, but you can also use this system via remote identification. Remote banking access, you can do a lot. You can buy a lot of land. You can plot land. You can enter a contract, and when all of this information works for you, and I think that's the kind of solution that we will focus on once we transit to a more transparent system, and that will be very important for SMEs, and that will allow SMEs to work differently. This will provide new opportunities. This will reduce regulations, supervision, because everyone's transparent online, and it makes all the financing much more affordable for the same reasons. If you're transparent online, all the transactions are transparent online, it works much easier. And that's why in digital economy and digitalization, under this approach, this holds the promise of resolving this problem. Victor, thanks for your very realistic assessment. Mikhail, there is little time we have left, so maybe you could summarize our discussion, because, well, we've mentioned our points. What of this will you use in your work? Well, I'll be brief. Well, that was a good talk, wasn't it? Okay, maybe some more details. Of course, well, we'll try using all of this proposal, because we keep constant contact with our colleagues, because I deeply believe that you can't just have one perspective on the problem, because you're also a part of the problem. That's why it's very important that, along with us, that credit institutions are involved in addressing these issues, and the people and institutions like Victor's project that is leading in terms of consumer protection, that has become very visible and useful. I think that's, well, sometimes it may be hard, sometimes it's just, we don't like to look at our own problems, but at the end of the day, it helps create a healthier financial environment in our country. That's why I believe it's a very useful, very progressive practice. And speaking of our further trajectory, well, we can't help but mention fintech again and how it affects financial inclusion. Okay, I'll give one final thought, that some food for thought, because we do understand that we are always trying to catch up with the technology. We're always a step behind, and now it's 2 steps behind, because the pace of technology is getting quicker and we can't catch our breath, the gap widens, and therefore the conclusions, it may look strange, but we should also become more technology aware of the technology of the products used in the market, should become more savvy, and to control this process, we should then use AI ourselves, we should use the technology ourselves. Otherwise, our personal factor, their own personal factor will probably reduce, I'm sure about this. And so just some food for thought. Maybe in 10 years, the forum will be attended by artificial intelligence, by robots who will discuss the issues, and we'll be just listening to them online and accept the results of their discussion. Okay, maybe I'm joking a little, but I am sure that we'll have to reassess of what the strategic role of regulators will be further on to make it more effective and to keep it effective in the rapidly changing world. Thanks, Mikhail. Thanks to all the panelists. I believe that Mikhail has touched upon a very important topic, that in 10 years we'll meet here again, maybe as robots, maybe as AI mechanisms, maybe on our own. But in 10 years, see you here or at least see you here after lunch. Now, let's have a break. Thank you.